Hey everyone, welcome back to the channel. Today, we're diving deep into a comprehensive analysis of American Express, ticker symbol AXP, one of the heavyweights in the financial services space. If you're thinking about adding this stock to your portfolio, or just curious about how it's performing, stick around because we're covering everything from financials to recent performance and even a SWOT analysis. Let's get started. So, why are we talking about American Express today? Well, AXP has been a staple in the payment services industry for over a century, and it's often seen as a bellwether for consumer spending trends. With a market cap of over $247 billion and a stock price hovering around $359 as of the latest data, it's a significant player. Plus, with recent earnings reports and some interesting moves in the market, there's a lot to unpack. I'm excited to break it all down for you and see if this stock still has that premium edge. Let's kick things off with a quick look at who American Express is for those who might not be as familiar. Founded in 1850 and headquartered in New York, American Express is a global leader in charge and credit payment card products, not to mention travel-related services. They operate through a unique business model that focuses on premium customers, think high-net-worth individuals and businesses, offering cards with rewards and perks that keep users loyal. Under the leadership of CEO Stephen Squeri, they've got over 75,000 employees worldwide and a strong presence in the U.S. and international markets. Their brand is synonymous with trust and exclusivity, which is a big part of their competitive moat. Now, let's talk revenue. How does American Express make its money? Looking at their 2024 fiscal year numbers, total revenue came in at a whopping $74.2 billion, up from $67.4 billion in 2023. Breaking it down by segment, the U.S. Consumer Services segment is the biggest driver, contributing about $31.4 billion. That's no surprise given their focus on premium cardholders in the States. Commercial Services, catering to businesses, brought in $15.9 billion, while International Card Services at $11.5 billion. Their Global Merchant and Network Services, which handles transaction fees from merchants, chipped in $7.5 billion. Geographically, the U.S. dominates with $51.5 billion in revenue, while regions like APAC and EMEA contribute smaller but growing portions at $4.7 billion and $6.2 billion, respectively. This diversified revenue stream shows they're not overly reliant on one market, which is a good sign for stability. Moving on to earnings, let's see how profitable American Express has been. For the full year 2025, they reported a net income of $10.8 billion, translating to an EPS of $15.40, a solid jump from $14.04 in 2024. That growth reflects strong consumer spending, especially among their premium cardholders, and effective cost management. Revenue for 2025 hit $80.5 billion, up from $74.2 billion the prior year, showing consistent top-line growth. Their operating income also climbed to $16.6 billion, a clear indicator of operational efficiency. One key takeaway here is that even in a high-interest rate environment, AXP has managed to maintain credit quality and grow earnings, which speaks to the resilience of their customer base. Let's dig a bit deeper into what management had to say during their latest Q4 2025 earnings call. They highlighted robust financial performance with strong growth in cardholder spending, especially in the premium segment. The leadership team emphasized their focus on expanding digital capabilities and partnerships to drive transaction volume. They also pointed out steady credit trends, which is reassuring given economic uncertainties. Guidance for the coming year remains optimistic, with expectations of continued revenue growth and investments in technology to maintain their competitive edge. It's clear they're doubling down on innovation and customer engagement to keep that brand loyalty strong. All right, let's get into the nitty-gritty of their financial statements. On the balance sheet for 2025, American Express reported total assets of $300 billion, up from $271.5 billion in 2024. Cash and equivalents stand at a healthy $47.8 billion, giving them plenty of liquidity. Total liabilities are high at $266.6 billion, reflecting the nature of their business, with significant cardholder balances and debt obligations, but their equity of $33.5 billion shows a solid buffer. Their debt-to-equity ratio sits at 1.73, which is manageable for a company in this sector. Looking at profitability metrics, their net profit margin for 2025 was around 13.4%, and return on equity is a strong 33.5%, indicating they're generating good returns for shareholders. Cash flow is another bright spot. Operating cash flow for 2025 was $18.4 billion, and free cash flow matched that, showing they've got the cash to reinvest or return to investors through dividends and buybacks. Now let's talk valuation. How expensive is AXP right now? With a current PE ratio of about 22.8 based on trailing 12 months, it's trading at a premium compared to the industry average of around 18.4 for credit services. However, looking at forward PE estimates, analysts project this dropping to around 20.5 for 2026 and even lower to 17.8 by 2027, suggesting the stock could become more attractive if earnings growth continues. Their price-to-sales ratio is 3.1, which is reasonable for a high-margin business like this. Dividend yield is modest at 0.9%, so this isn't a stock for income hunters, but with a free cash flow yield of 7.7%, there's potential for more shareholder returns down the line. Overall, the valuation isn't cheap, but it reflects the quality of the business and its growth prospects. Let's break down American Express through a SWOT analysis to get a clearer picture of where they stand. Starting with strengths, their brand power is undeniable, synonymous with premium and trust, which keeps customer loyalty high. Their 2025 revenue of $80.5 billion and net income of $10.8 billion show robust financial health. They've also got a strong focus on high-spending customers, which drives higher margins. On the weaknesses side, their reliance on consumer spending makes them vulnerable to economic downturns, and high debt levels at $266.6 billion in liabilities could be a concern if interest rates spike further. Opportunities are exciting. Global expansion in markets like APAC, where revenue is growing, and investments in digital payments could fuel future growth. But threats loom large, including intense competition from Visa and MasterCard, plus fintech disruptors. Regulatory changes could also increase costs or limit certain practices. It's a mixed bag, but their strengths give them a solid foundation to tackle these challenges. Let's take a look at recent performance in the market. Over the past 5 years, AXP has been a standout, up an incredible 164.5%, crushing the broader market. However, shorter-term performance has been choppier, down 4.3% in the last week, 4.7% over the past month, and 8% over the last 3 months. On the flip side, it's up 13.1% over 6 months and nearly 12% over the past year, so the longer-term trend still looks positive. Compared to the financial services sector, which is up 14.8% over the past year, AXP is slightly underperforming annually, but way ahead over 5 years. For short-term moves, I'd watch the $350 level. If it holds as support, we might see a bounce, but a break below could signal more downside. Now let's try to figure out the intrinsic value of American Express to see if it's over or undervalued. Using a discounted cash flow approach, I've factored in their strong free cash flow of $18.4 billion in 2025, projected earnings growth based on analyst estimates, and a discount rate that accounts for market risk. I've also considered their historical growth rates and the forward PE trends, which suggest earnings expansion in the coming years. After running the numbers, my intrinsic value estimate for AXP comes out around $400 per share, compared to the current price of $359. That suggests there's some upside potential, about 11% if the market catches up to this valuation. Of course, this is based on assumptions about growth and economic conditions, so it's not set in stone, but it does indicate the stock might be slightly undervalued at current levels.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stocks Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.